Hi everyone, a huge, massive welcome to today's Monday market update. I always enjoy these episodes because we can focus on the three biggest things that I think are most valuable for you to know as you approach this market. And this week we have a beauty. We've got the US dollar continuing to strengthen. We've got the Bitcoin hash ribbon indicator firing. I love looking at this chart, and if you look back in history, you'll see why. And then we also have a quick look at Ethereum. So buckle up, let's crack straight in. I also want to just congratulate all those graduates or VIPs that are finishing up in the support group who are now looking to take that next step up into the mastermind group. It has been absolutely incredible to see the enthusiasm of new blood coming into our advanced mastermind level. It's just absolutely fantastic. And I just wanted to highlight, guys, every week in the mastermind group, I do a Monday market update like this one, but more advanced. I also do a macro episode, which is probably my favorite episode to do each week. It's a bit longer, it's maybe 30 minutes each Friday. Here's that there. It's called Talking Crypto, Thinking Rich. And I just wanted to highlight some fantastic feedback that was given by some of these graduates that have already moved up and seen some of the content. And this is just the beginning for them as well. So Elliot said, this is exactly the type of information depth that I was looking for to set up I find that feedback just tremendous, and we've gotten similar feedback from everyone. So again, in the graduates, we've had 15 come on board to the masterminds. Our work is cut out for us, but we are absolutely prepared and cannot wait. If there's anyone else that's sitting on the fence and just wants to take that next level up, where we really support you going, I guess, from the graduates group to that next stage, we're there and we're very excited to do so. So congratulations to everyone that did this. I'm just so pumped, and I wanted to highlight that, how pumped we are. We're super excited. We had a team meeting this morning and it's just reinvigorated absolutely everything we do. So congrats again. Okay, this is the chart I wanted to show you just quickly. The US dollar is surging, and it's not quite going for record highs, but it is approaching areas which we haven't seen since the commodity bust up boom about the 13th of July, and when most risk markets absolutely fell through the floor. If we go back a little bit further, I'll come back to this in just a sec. We've seen some tremendous rallies in the dollar, and I just want to show you here what generally happens about the correlation and the relationship between Bitcoin and the dollar, and it is an inverse relationship. And what I mean by that is when the dollar is surging and reaching new highs, or just generally moving higher, Bitcoin is in a weak state. It is forming a bottom area. So just wanted to highlight that. So if you have a look here, the opposite is also true. When the dollar's had a significant drawdown and it's sort of rallying on, not rallying, it's moving towards, let's say, multi-year lows in the broader picture, Bitcoin is making highs. It is topping out. It is in the top areas of the bull market. When the dollar begins to reverse, that's when you need to get worried in terms of taking profit from the whole situation. So you can just look at a Bitcoin chart, look at Ethereum chart, but if you're not getting the entire picture, Bitcoin and the dollar has this inverse relation. Because if you're looking at a Bitcoin USD chart, if the denominator, if you're pricing Bitcoin in dollars, if suddenly dollars are worth more today than they were yesterday, suddenly your Bitcoin value is going to go down unless Bitcoin is significantly seeing some buying power to keep up with the dollar. So that is exactly how it works. And you see what the dollar is trying to do here. It's cracking higher. Now, this is based on many factors, but more so than most, it is based on the Federal Reserve of the United States tightening those interest rates. So what that does is makes the dollar scarcer, removes a lot of liquidity from the system. That's what they're doing through QT, quantitative tightening. So I won't get in the weeds with that there, but that is why we're seeing the dollar move higher. We're also seeing massive issues in emerging markets across the world who all their trade and debts are done in US dollars, and they need more dollars into the country. Every time this dollar keeps ticking up a little bit higher, suddenly their debts get more expensive and they need more dollars in country. And it is this horrible doom feedback loop, which we're seeing right now, where US dollars are still the cleanest dirty shirt in the laundry. So if you're looking at, why we, in our course, in our VIP course, if you haven't joined us, we really want to change our mindset from Australian dollars, New Zealand dollars, wherever you're based, to being in US dollars, because we see that as the fiat currency with the most value. It's the global reserve currency. That may change in time. Yes, they are printing tons and tons of the US dollar, over the period of time. And but you have to think about, if you're comparing the US dollar to fiat currencies globally, the US dollar is losing its purchasing power slower than everything else. So everything else is going to slowly die out, well, die out quicker. The US dollar should be the last man standing, which is why we enjoy looking at the USD as well, predominantly. Also because it's the highest liquidity trading pair for every single crypto in the world. It's got stable coins attached to the US dollar, as well as some other currencies, but just hasn't that high liquidity. So if we're looking at it here, it's pretty obvious to me, dollar really needs to begin to top out. And we were hypothesizing that it was topping out in this area here, and it was having, a larger pullback to 102 is what I really wanted to see, for Bitcoin to have a relief rally a lot higher, but it hasn't done that. It's moving higher. So it really wants to finish this parabola that it's trying to do. So hopefully this breaks at some point and it really falls lower. So keep an eye on the dollar, because as long as it's surging, Bitcoin will have a really hard time, and crypto in general have a very, very hard time of breaking out from the lows and where it's stuck. All right, now I wanted to bring up the hash ribbon. So this is such an important chart. Look at that. So Bitcoin's consolidating into this region here below the 200-week moving average, super important region. Really want to move back above it. Once we're above it, you can be more confident, but when we're below it, you have to be a little bit, you have to have the possibility in your mind that we are going lower. We're going to retest the lows. So super important we get back above that. But what I want to just quickly show you is that hash ribbon, because historically it's been a tremendous buy signal. So if we just go to the daily chart and bring this up here, so you can clearly see where Bitcoin is at the moment. It's moving up in this higher low structure. So this low, that low there is higher than the last low, and this low here is higher than the last low. It's really trying to build this positive trend as well. If you just see here, these highs are consistently higher than the last. Lows are higher. So you've got this nice rising channel developing. I'll show you on another chart I've got coming up soon, which might not be a very good portent for what could happen soon. However, we've just got to play it as it lies and go from there. But if we're looking at this hash ribbon down here, so we can see at this point in the market, at about 30,000 at the start of June, saw the market take a massive dive lower, basically haircut the cost of Bitcoin almost in half. And that's when we began to see a huge capitulation in the miners. They become unprofitable. And that is all the hash ribbon really shows you, is when the cost of mining Bitcoin is too expensive for the power that they're generating, the returns that they're moving through. And you will see Bitcoin miners go under. They will go insolvent. They'll have to sell their equipment. They generally dump a lot of Bitcoin on the market. And when we see the capitulation phase, it's exactly what is happening in the industrial level of the Bitcoin mining side. They're dumping their Bitcoin to keep their heads above water, and many won't survive that process. Goes and goes and goes on and on and on until we see the end of it. And it's based on moving averages. I'll go into that in a second, very briefly, on Glassnode on-chain data. But what we really like to see here, and it's very, very simple, it's why I love it. As soon as you see that big blue buy dot, it means the capitulation is largely over. And after that point, the market has free reign to rally. We don't see those large capitulation volumes that we have seen previous, at least according to history. Now let's just have a look back and see what happens when this flashes buy signal. I mean, you can maybe already tell where I'm going with this, but let's say here, just before that's the first high up to about 65,000, you can see here, Bitcoin entered a capitulation phase just in this trough here, moved through. And then when we got to 20,000, it signaled a buy, flashed a buy. So when we saw the buy, we saw a 281% move. Bitcoin was in a full bull market there. You would have made almost thousands of percent in some of your altcoins if you had in your portfolio. So you really play that cycle higher. And then it also happened around this area here, which is a bit of a confusing phase for Bitcoin. We had a bit of a secondary high, 69,000. It hasn't really happened previously. Based on a bit of FOMO into the Bitcoin spot ETF, which turned out to be a futures ETF. You can see as we have this big sell-off, a lot of miners are mining Bitcoin up at these levels, making tremendous profits. Then suddenly this big drop happens and their profits get cut in half essentially. And then a lot of them become insolvent, start capitulating. Then we have another buy signal over this side. Then we made a secondary run up there. So that can happen as well. But I would use this more as a bottom indicator. We saw it also in COVID when we were around here, when the price got halved, capitulation, buy, huge run up. But what is really, really telling is if we go back to, say, the 2019 Bitcoin bear market, we were in this sideways chop sideways chop, 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 chop until we had the full breakdown into the final low, which is around $3,000. So capitulation goes up here and then finally flags down here. Then we had a run up. It wasn't a bull market, but the bulls were in charge. So we had COVID, but it was 300% gain after that point. So super, super fascinating. And I'm sure if we go back to 2017 before the huge run up, we likely see something similar. Yeah, look, we haven't had a capitulation buy after that point. So when these flash, and if you don't get another one directly afterwards and you follow the overall trend, I mean, it's absolutely insane what you can see here. So the miners didn't really have a capitulation, but that was about 6,000%. I could probably assume up to the top. Look, actually, let's just draw it again. Around about, excuse me, yeah, almost 5,000%. So insane gain. So use that indicator just to give yourself an idea of where we are in the cycle in terms of finding a bottom, and use it in a confluence with the on-chain data and technicals and sentiment and all that. We just pop on over to Glassnode. We have exclusive access to this platform. Up-to-date data is just such a game changer when you're looking at the health underneath the marks, like an X-ray machine. Now, if we just have a quick gander here, in fact, I'll just zoom out, shows you very similar to what the hash ribbon just did on the chart, but a little bit more technical, which is great. So every time we've seen a band, we have the capitulation at the beginning, and then when the edge of these red areas finishes, it means these two moving averages have actually crossed. And every time they cross, it means that the capitulation is over. Now, if we zoom into what's happening right now, like I said, we've just been flashed a buy signal at the end of this range, so been in this area all the last couple of months there, and we've seen the 30, is it the, no, the, yeah, no, I was right. The 30 moving average, so the green line, crosses over with the blue line, the 60-day hash rate moving average. You can look at the formula, how this is all calculated, but you can see historical accuracy is pretty on point here. When they cross over, it's the end of that phase, and then we have a more bullish frame of mind after that. Doesn't mean we can't chop sideways for the next 3 months. In fact, I'm probably banking on it, us moving up to 30,000 and just chopping down back to 24 and moving around that area just to really grind us out of this bull market. It's absolutely on the cards. But the hash ribbon, it's almost been bang on every single bottom. So you have to pay attention to it. All right, now if we just crack on over to just another Bitcoin chart, I'll just show you a bit of a bearish narrative that I'm seeing. So like I said with the channels, I was going to bring it up that might not be the best thing to see. Again, what did we see in the early January? We saw a very similar phase. So higher lows all through, and then we had a breakdown. Also higher highs. What do we have here? Higher lows, higher highs, but then a breakdown. So clear bear market trend here. Each level falling to a lower level. It's the exact opposite of bull market. You just continuously go sideways and you climb higher, go sideways, climb higher, altcoins catch up, climb higher. It's exactly the same thing, but in reverse. So this is a really great education for many people moving into this market. If we have a look here, what might be different at this point is every on-chain signal I'm looking at is showing extreme point oversold to the other side. Also a few other indicators which I won't bore with you here, including macro and all that, Federal Reserve potentially pivoting at some point. You know, it's all sort of lining up. And also 20,000 was the previous Bitcoin all-time high. So being in this area just feels like an area of maximum opportunity. Someone like myself who's been in this for a few cycles. So this is definitely an area of strong, strong interest. You can see the enormous volume profile on the right-hand side that is holding up this price action. Now, what I would be concerned about here is if we cannot break back into this channel and move higher, we're going to run, even if we do, we're going to run into some pretty heavy resistance at this 21 moving average. That's that blue line there. That just means the average of 21 of these red and green day price action candles. It's giving you a nice flat average. And why I'm worried about this level is because it is confluent with this line I've just quickly drawn up here, where it's about where the 200-week moving average sits and also with the Bitcoin realized price sits. Now, if you're not going too deep, that is the average cost basis of Bitcoin investors. We really want to get back above that to really signal that we're out of this bear, this bottoming phase. I don't want to say bear phase because we're still in a bear market until we're really above 33,000 and above this red line, which is the 200-day moving average. So just keep that in mind. This is a clear retest of this channel. You can see this little red candle that's open today. It's just retesting. Really want to crack back in. The risk is we find resistance here, but we can't break it, and we fall down lower to some lower levels, which we have outlined in our monthly newsletter, which we will put out this Thursday. So as all the buy and sell levels you need to be aware of, make sure you get on that. If you're not a subscriber, do it. It'll be very similar to what happened up here in January. We broke down, it looked like, gave everyone a bit of hope, broke back above a little bit, broke under, cracked back above, but ran into that 21. Like I'm saying here, if we break up, we run to that 21. Exact same thing could happen here, and we just fall lower into a new phase. So just keep that in mind. Okay, let me just pop on over to Ethereum because I want to just have a quick gander at just what I'm saying. So we want to be careful with Ethereum that you're not FOMOing in just based on the merge, because we've seen a tremendous anticipatory move into the merge. Let me show you here. So just there, we've seen from, say, let's just say here, from there, we've seen 100% rise in the last, month going into this merge. Now, this to me looks like a really nice pullback, almost a inverse head and shoulders. You've got a left shoulder here, you've got the head here, and a right shoulder forming here. This is a great setup for a move higher into the September merge. But if Bitcoin is showing instability, if traditional markets are showing instability, this is going to break down. I cannot see this moving higher with all that. I mean, it may, but it's a low probability play after such a rise in a bear market. So just keep that in mind. However, if Ethereum is, say, coming back against the Fibonacci levels, that's the 0.5, that looks really nice. It's bouncing off the 21. If it rallies back above, let's say, what's that there, the 100? Okay, the 21. If it can get above this purple line here, you see up here, and begins to break up, it's going to go higher. It's going to go above 2,000 again, potentially higher into the merge. Based on fundamentals, I mean, Ethereum should be worth more. The fundamentals of Ethereum after merge, again, I'll cover this in the newsletter, so make sure you read it, are pretty big. The value proposition of Ethereum after merge is quite strong. However, you really have to be prepared for a buy the rumor, sell the news event. So don't get FOMO buying this thinking, well, it's just going to keep going up to 10,000, because it will not. We'll see generally, and especially what I'm seeing in options markets, again, not going into the weeds, we're seeing the market being positioned for a nice run up into the merge and then a quick sell-off. So anyone who's buying in FOMO and speculating short term is going to get killed. So if you're buying Ethereum here, fine, but just make sure you're looking at quite tight stop losses if you're doing short term stuff, or if you're doing mid to long term, even better, you can position yourself for the next bull cycle with these pretty good prices down in the lows. But you can see here, this line I've just drawn really wants to get above that to be bullish again in the short term. And why, you can see this is the last area where we saw a lot of volume traded on the left hand side here. And also you want to validate this shoulder, inverse head and shoulders thesis, and overall just the uptrend that you want to see keep going, because when you look at this, it's low, high, low, high, low, high, low, high, 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 high. It's moving in a really nice trend higher. So everything's pointing to up, but you just want to be very mindful of what's happening outside of Ethereum, because it will be affected. Highest liquidity cryptos are Bitcoin first, above all anything, and then Ethereum. Capital flows into Bitcoin and out of Bitcoin first, Ethereum, and then altcoins. They're very much linked together, and if the big daddy Bitcoin isn't seeing inflows and seeing positive action, then it's very unlikely Ethereum and altcoins will. So just keep that in mind. All right, guys, I hope you've enjoyed this episode. As always, I've had a blast. If you're interested in signing up to a newsletter, we'll post the link tree below where you can sign up. If you're not a VIP member, you haven't signed up to our course, absolutely click the link tree as well, and speak with one on our team today. If you're actually interested in becoming another mastermind that wants to move up, take that next step, click the link tree as well, and we'll be able to field that query. I know it's super, super exciting. So thank you for your time. We'll chat again on Wednesday with the altcoin Bible. Ta, bye.